Money FM 89.3, the best of the afternoon update. The Afternoon Update with Lynlee Foo.
That's right, you're with me, Lynlee, on the Afternoon Update. How are you doing this Tuesday afternoon? Now, when was the last time you heard someone say the office is dead? Not too long ago, that was the buzz. Hybrid work, remote teams, downsizing footprints. It felt like the future had moved away from the office. But now, the picture looks slightly different. The way we work keeps evolving, and offices in Asia Pacific are filling up again. Companies are tightening attendance rules, and instead of downsizing, many are expanding and competing for the best CBD locations. That's shifting the balance for businesses, landlords, and investors, and it has big implications for Singapore's role as a regional hub. To unpack the findings from CBRE's latest office occupier survey, I'm joined by Ada Choi, Head of Research for Asia Pacific at CBRE. Ada, a very good afternoon to you and welcome to the show.
Good afternoon, and thank you for inviting me to the show.
Great to have you with us. Now, let's jump straight into that survey. One of the most striking findings shows that 82% of companies now enforce consequences for not complying with return to office rules, and half even link office attendance to performance reviews. That's a big jump from last year. Why are employers across Asia Pacific getting so much stricter?
Well, I think you can see the difference of the behavior and productivity when people are coming to the office. And I think it's easier for the employer to cultivate their staff and also the engagement when they are seeing the staff more often in the office. Not only between the boss and the staff, but also between the staff, it's easier to build up their team spirit.
Okay, so another figure that stood out to me, 42% of occupiers plan to expand their office space over the next 3 years, while only 20% plan reductions. That's a clear reversal from the consolidation we saw just after the pandemic. So how significant is this rebound in demand?
I think many of the companies, particularly some of the bigger companies, they have done the consolidation. So this is probably the end of the consolidation cycle, and therefore they have to enter into the expansionary demand. And this also relates to the rebalancing of their overall portfolio. I would also like to highlight that it's not only about the amount of space, but also the quality of the space that they are offering. Because the workplace, as I've mentioned, is a place that they want to cultivate their staff, getting them more engaged. So the workplace experience is also making them to increase their investment and focus on their workplace.
So is this across the board with smaller firms as well as larger corporates?
I think the smaller firms, we are seeing a stronger demand for expansion. But for the larger companies, I think they started with some surplus in their space. So they cut down some of the space during COVID. And now I think it's more balanced overall. Mm-hmm. But for the smaller companies, if they cut, they just cut down to the bone, and therefore they now have to expand. I think geographically, we are also seeing that the expansion is more prominent in India and Japan. And in terms of the industry, I think that the financial industry has a higher requirement for the people coming to the office.
Okay, let's talk more about that. Industries, when you talk about financial industries, are you talking about just the large corporates? What about the smaller firms? Which industries are we really talking about on each side?
Yeah, I think financial sector is one of the case that we see a lot. Like, for example, the wealth management company, hedge funds, they usually have a relatively lean kind of staff. But now, if they are seeing the growth, particularly I'm based in Hong Kong, and the return of the IPO, this also push them to be more bold in getting the space. Mm-hmm.
What about professional services or life sciences?
Well, I think life sciences, particularly, we are seeing quite a lot of new startups, although I would say that it's a bit slower than the period when we had the COVID. Mm-hmm. In terms of the professional services, it's kind of mixed. I think some of the professional services, they are still growing. Particularly, I'm hearing some of the Asia-based, mainland China or oriented professional services, they are expanding more aggressively.
Wow. And what about flexible workspace solutions? Do you see occupiers in Asia turning more to, flex space as part of their strategies?
Of course. And I think this is also paving the way for the flex space to be more sustainable. Recall several years ago, we saw the boom of co-working, but now we start to see that business model is more sustainable with the enterprise solution more prominent, and not only in markets like Singapore, more mature market, but also in a booming market like India. We are still seeing the net increase of the overall space in flex, but I think the rate of growth is more sustainable.
Okay, just doing a comparison, how do Asia Pacific's office occupancy and leasing trends compare with other global markets, say the US or Europe?
Well, it's a very interesting question. I think for Asia Pacific itself, we also see a strong bifurcation. So if you look at China, India, it's very easy for you to see the vacancy over 20%. But for Singapore, Tokyo, and also Korea, the vacancy is in low single digits. So it's a very bifurcated situation. In the US, I think particularly in the West Coast, we are still seeing the vacancy over 20%. But the main common issue that we are facing is the high construction cost. So the new supply, no matter we are talking about the US or in Asia, mature Asia particularly, we are going to see less new supply, and therefore we are more optimistic about the office market.
Wow. The CBRE survey also points to a flight to quality, with 88% of companies preferring CBD or CBD fringe locations. Ada, why do CBDs remain so dominant here, even with hybrid work still around?
Well, I think if you want people to come back, you want to make the commute easy, right? And to be honest, most of the cities design the infrastructure based on, the CBD is the center. Like in Hong Kong, Central, these are the locations that is easy to get to. Raffles Place, these are the places that is easy for you to take the MRT or any kind of transportation to go to. So this is one of the major reasons that many of the companies, when they choose a new location, they want to be in the CBD area. But I think we also point out in the report, the supply or availability is kind of different. The decentralized location has much higher vacancy. So there is a mismatch between where people want to go and where the space is available.
Exactly. And in a market like Singapore, where prime CBD space is already limited, I imagine that creates real challenges.
Yeah, and I guess the government also want to push the decentralization, the Jurong Lake area to be the next CBD. But I think you need to increase the interest in those decentralized locations. Probably infrastructure is one of the critical factors.
Okay, so sounds like the race for quality space is only getting more competitive.
I think so. And it's not only Singapore, I mean, in Hong Kong and also in Australia, these are the markets that the prime locations are still highly required. But for some of the decentralized locations, like in Hong Kong, some of the decentralized office, the rents are similar to industrial. Can you believe it?
Wow, okay. Now, let's bring investors and landlords into the picture. With this rebound in demand and competition for prime locations, are we looking at the start of a new upcycle for office real estate in Asia Pacific?
Well, to be honest, if you also had a question about Asia compared to other parts of the region, we saw a huge decrease of office investment in the western part of the world. But in Asia Pacific, I think office always accounts for a large amount of our investment. I think for the first half of this year, office accounts for about 40% of the investment volume. So it's always the most important sector for people to look at. But I think in the past 1 or 2 years, many of the investments were made by end users, right? So the corporations, they are still seeing the value of office, but the fund managers, some of them may want to step out from this sector, but now they are picking the best market that they want to focus in.
Okay, help us understand this a bit more. Do you think these shifts could trigger a new wave of capital flows into Asian office assets?
Well, to be honest, if we look at the fundraising amount, which is accounting for 28 billion just for the first half of the year, and this is also the same level we had in the last year, full year. So we are expecting more capitals going to the different parts of the real estate sector of course, office will still be the most important sector that people are looking at. And in APAC, I'm always saying it's the jazz markets that have the most interest. Jazz is Japan, Australia, Singapore, and South Korea. These are the 4 markets that fund managers are focusing on.
Okay, let's zoom in on Singapore. Given its role as a regional hub, how does it stack up compared with this jazz group of cities you were talking about?
Well, I think we, in fact, have just revised up our forecast for Singapore office. The rents are resilient. We are also not seeing oversupply. In fact, in the CBD area, basically not many material new supply. As a result, I think this is one of the resilient markets that many of the investors will be interested in. And another factor is interest rate. Singapore interest rate has dropped a lot. Compared to Japan, Japan is in fact having another cycle of increase in interest rate. So the volatility is making Singapore more attractive.
Okay, so that's not a risk factor for office investors.
Well, I think investors, they need to cherry pick, right? Because centralized office, those that will attract the tenants, these are the things that I think will create value for the long term.
Okay, since we're on this topic, how much could global economic uncertainty slow down this rebound in demand?
It's very interesting. We have done another analysis on how many of the tenants in the office portfolios really affected by tariff. I think it's only about 10%. Right? Those that are in manufacturing, trading, or automobile. So it's largely made up of the financial sector, the tech sector, and we all know that the tech sector, they also have some structural benefits. The boom of AI, these are in fact counteracting the factor of tariff or the uncertainty that you've mentioned.
Okay, interesting. Ada, before we wrap up, if you look 3 to 5 years ahead, what's the one trend from your survey that you think will shape the office market in Asia Pacific the most?
One trend I think we've already discussed is the enforcement of the return to office.
Okay.
And this relates to how we view the office utilization. I think many of the media use average utilization, but we think peak utilization, which means that most people are still coming back on Tuesday, Wednesday, Thursday. And this is the utilization people will use for their space planning.
Okay, so more upgrading, I suppose, from now to, 5 years ahead.
Yeah, I would say experience, upgrading, these are the key factors. Of course, cost, always.
Ada, thank you so much for your insights today.
Thank you for having me. Good to talk to you.
Ada Choi, the Head of Research for Asia Pacific at CBRE, breaking down CBRE's 2025 Office Occupier Survey. Seems stricter return to office rules and the race for prime CBD space are setting the stage for Asia's next office cycle. You've been listening to Industry Insight.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.